Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you on this beautiful Friday morning here in downtown Detroit. Got a lot to get to this morning. We've got Powell speaking later on this morning. We've got some earnings to discuss from yesterday after the bell and this morning's pre-market session. We have the pot stocks continuing to rally. More news coming this time from the UK on that. And our guest today, Brad Loncar, he will join the show at 8:35 to kind of break down the Chinese biotech space for us in his new ETF. Joel, what's happening in the S&Ps overnight?
Oh, we are green on the screen, up 5.5 handles at 28.6350. Pre-market low just below the close of 56.25. Pre-market high 65.5. Big three tops above to take a look at 68, 69, and 74. On the downside, even if you take out that pre-market low, Thursday's low is right there at 54.75. Crude up 77 cents. Took a little breather yesterday, but took out the double top from Wednesday and Thursday at the 68.10 area. We've hit 68.79, and that's a number that matches your August 8th high. Gold under $1,200, but trading up $4.90 to $11.98.90. Silver up 7 cents at $14.61. Bitcoin just hanging out, can't break out over that 6,800, but trading up $117.50. This is the SIBO contract at 65.25. Dennis, how was your boating day?
Good. So I had the day off, and I have not taken the day off for a long time. It's amazing. I come here this morning, I feel so out of the loop. I'm trying to go through news, go through the action from yesterday, go through some charts, figure out, what happened, obviously when I missed a day. And it takes a day or two. So that's why I don't usually like taking days off. I'm always in the zone because I'm seeing all the action, and then all of a sudden take a day off and you're kind of lost. But I'll get back. I'll get it back here for you guys here this morning. Went on a little boating trip with my friend there from Japan. We went up through the locks, went up and saw a Big Chute, which is nice too, which is a marine rail that picks up your boat and actually takes it up. So we went through the first lock and went up to the second one. It was a beautiful day, although on the way back, it got a little windy. So I got my boat there, and there was probably some 4-foot chop.
Whoa.
So it's a pretty good chop. So he was hanging on pretty good on the way back, but I love the chop, and I didn't have the kids with me, so I don't have to worry about my 1-year-old and 3-year-old bouncing off the boat. So I could take on the waves a little bit harder, and it was fun. I enjoyed that.
So you don't sneak a quote, like you got your phone with you. You don't.
Oh yeah. I go to the bathroom and check out what's happening there. I saw Alibaba giving it back. Don't worry. So. It was an interesting. I'm always still sneaking quotes, but it's still when you're not at your computer and all your filters running, you're not seeing all the action. You're seeing isolated, glimpses of what is happening there. I'm keeping a watch on the overall market, so I'm never completely out of it. What do you do when you go away, Joel? Same thing.
I keep it too. Yeah. I mean, I got TradeStation on my phone. I got Thinkorswim on my phone.
Yeah, get away from that.
I don't really enter, I mean, I'm always looking, I got to have my glasses or whatever, but yeah, I like to keep the quotes up. When we were in Montana though, even though we had wireless internet at our cabin, I did not have wireless internet. So I missed quotes for a few days, which is fine, which is good. You get caught up over the weekend. Let's look at that candle in Alibaba yesterday.
Ugly.
I guess it's the interpretation of the news report. They had that thing up all the way to 185, big red candle. I don't know what you think of that one. Heavy volume too. I guess you could still lean on the low of the move if you're bullish. I didn't get the exact comments. I don't know if they pulled some wool over the eyes with the actual report, but some volatile trading there in Alibaba.
I'll just say, and this just goes to show you, when you get those earnings moves counter to the overall trend, they are often fades. And that's what we saw here is, everybody is underwater that bought this thing in the last 3 months. And it pops up that, 6, 7 points in the initial report. And they come in saying, thank you, I got my money back, get me the hell out. And they didn't just keep saying that, they kept saying, and then you get the people who actually bought the stock on the bullish report, and they get overpowered by the people who want their money back, and they start selling off. And then you've got all those people caught, and then they're trying to cut the losses and get out because people were chasing the report. Again, in this market environment, it has not paid to chase. I'm going to say it again and again and again. This, sometimes we're in really trendy markets and you can chase stocks. This has not been the year for that. 2018 has been the year really of the fade trade. And if you were fading that initial earnings pop, you were laughing. And you were bringing to my point, just to go on a tangent here about fading trades. Look at Lazy Boy. And Joel and I were talking Lazy Boy. We did not understand how the stock could possibly making a new all-time high 2 days ago when it was up. Oh, I think it got almost to $40. It's absolutely ridiculous. 20% move for Lazy Boy. I told the Lazy Boy story with the jaws of life. Maybe that spooked the investors, but it's been straight down ever since. So you've given back the entire 20% pop on the earnings there. And again, you're being rewarded for actually fading into these reports. So I don't know if it's not always the case. Sometimes there's some, flow through, but it seems like, my Kraft Heinz, I sold it on the big report. It seems like these stocks that aren't notorious for really, taking off, or they've been in even downtrends there. We get these big counter moves. It's opportunities to ring the register.
Okay, yeah, it got a downgrade yesterday too, and I think Spencer might have either mentioned on the day of the show or yesterday when you were out that, wow, not many people follow this stock. So the downgrade got it going, and it was actually weak from the open, but that's probably our Lazy Boy talk until next quarter. It is from the point of origin when it broke out. So if it can hold 33 and a half over the next couple of days, you got a chance. But
the earnings faders will be bringing it in. So you'll eventually have a bounce there. I mean, $30 has been on the support forever on this. That's still 10% below, but we just lost, 20% almost from the highs there. So it's possible. I think you could even be early if you're buying on Lazy Boy here. Yeah, but I'm not. I just can't see, why do I want to put Lazy Boy in my portfolio? Unless you've got this, everybody's staying home. They're watching their Netflix. They're kicking back on their Lazy Boys to watch their Netflix. I just don't see the growth.
And you know what else they're doing? They're ordering from Grubhub.
Or Domino's Pizza.
Right. Okay.
We know Domino's Pizza is the Netflix story. So speaking of Netflix, we have nice tangents here today, Spencer. Netflix getting upgraded at SunTrust. I don't know if you have the details on this one, Mr. Israel, but Netflix trading up.
Yeah, this is one of those things. So yeah, it's an upgrade, but they're lowering their price target by $5.
Oh, Spencer does not like that.
By $5.
Yeah, I don't like that either.
So it's an upgrade.
Are you really upgrading it? You're lowering your price target. You're really upgrading it?
It's an upgrade.
Or do you just want to say upgrade?
It's an upgrade to buy, but the price target is now down to 410. Whoop-de-doo. I mean.
You know what? Keep an eye on this. It's had a pretty good 2-3 day rally here. Besides yesterday, which had a little red candle. It got up to $350 yesterday. It reversed off that. You're getting a lift back up. So everybody who bought this yesterday was chasing. They're now getting a little bit of that money back. I'd actually think I'm going to fade. I don't know if I'm going to trade or not, but if I was trading it, I would be fading this pop. So again, fading this, not going with it. It's up 6 points. I think you got some people who took some heat yesterday that'll want their money back. It's been a pretty good move from the low of 310, just going back 4 days ago here. Yeah. So, and you look overhead, and I see overhead supply all over the place because people got burned in this in June, July, August. All those people want their money back in the 360 area where it hung out for a while. I think you've got sellers above overhead supply. That's why, sorry, SunTrust, I'm going against you on this one. I'm fading your upgrade.
One level for you folks. And Dennis mentioned that yesterday's high, which we have not seen, but someone has an opinion here at 346. Several highs over there since that 4 a.m. opening. So that's my first resistance, 346. Your close from yesterday was 39.17, but seems sellers ganging up here at 346.
Jump over. If we're going to do ratings, there's a few other interesting ones here too. Let's just go. Jefferies downgrading Philip Morris and MO. Was this just a hold though, Spencer? Again, was this like a conviction downgrade, or this was just a hold, wasn't it?
Yeah, it was the Philip Morris downgrade was to hold and an $80 price target.
Some of these have some of these consumer staples are starting to look a little bit weak. Obviously, this is tobacco, but I mean, some of your food stocks starting to give it back. Kraft Heinz, Joel, not looking nearly as good as it once did. I thought about trying to, and I tried to play it off Oprah there 2 days ago when we talked about it.
Nah,
and you were saying,
there.
yeah, you know what? I bought the open at 60 and I immediately started going down. I was like, this is no good. And I actually lost, I think, 30 or 40 cents. I was glad I cut the loss because it's now down to 58.80. I always cut my losers, but it went fast. I thought they might, open it and actually buy it on that, and it just didn't do anything for it. So, and it actually went, it continued to go straight down there. So it was a tough candle right off the hop. That was 2 days ago. Same thing happened in the open yesterday, kind of opened and down and just, they ran it down there again. But I'm just looking at the XLP even overall. It's starting to show some weakness last few days. Obviously, XLU moves with it very well for you pair traders out there. XLU utility's been weak too. But specifically, Philip Morris and MO, they kind of like this PM chart kind of looks toppy to me. Like, I mean, you kind of had a little head and shoulders going. This is not one I don't think I am fading this downgrade here. I think I would be a seller on pops on PM. So not sure if I'm selling in the hole, like we say sometimes when the stock's down $1, I'm going to sell it short there. But on a pop, if you get a relief day or something in PM, I don't like this chart at all.
Daily chart, I'd say look out below 81.26. I mean, why would you be long that stock under 81.26? Where are you going to lean? I mean, you might be able to catch something at the 80.05 low, and then this must have been an earnings pop of 76.52. I do like to set up a little bit better than in Mo. You have an exact double bottom here that you've taken out, 59.31, 59.26. You're not even trading below those yet, right? 59.49. So I think you got some Mo going through 59.30 here, kind of formation I'd rather see. But we'll see. It's stocks are just coming off a big 2-day decline, consolidated yesterday. Keep an eye on that double bottom.
High flyer Acacia Communications had a nice jump there yesterday. JP Morgan is having none of it. They are putting the fade trade on here overnight, downgrading it to underweight. Stock is giving back 3% here this morning, trading at $40. I think you got some buyers below. I don't know if they're going to come at the lower yesterday at 39.05, but the stock isn't in an uptrend, so I don't know if I can chase this one though and say, I want to buy as a 40, but just caution here. It's obviously come back in a little bit, but there could be some buyers below here.
Big move in the month of August. I think I would be more content to wait to see if you could fill the two. You got a gap down to 38.23 that was created in yesterday's session. So still $2 away. I'd be patient, see if you can get it in the lower 38 handle.
Let's jump to the big news of this morning. Broken at 7:05 by Bloomberg is Diageo. Your UK spirits maker there is sniffing around in Canadian cannabis again. And you're seeing all the Canadian pot stocks continuing to rise here. Surprisingly, DEO trades up on this because we saw, what happened to ST Zebra when they put an investment into Canopy Growth. They got annihilated. So I'd be cautious buying DEO because if they actually announce that they are putting an investment into cannabis, the stock is probably going to go down. So let's look here at the ones that are moving on this morning. CGC is trading up. Obviously, they've already got the investment for Constellation, so I don't think they're going to be the target. If you want to look at CRON, another traded one over there, and a lot of these are traded only in Toronto, so it's difficult to look at a lot of the other potential candidates. I mean, there's a lot of pot stocks in Canada. CRON, though, is one that's publicly traded here in the pre-markets, trading up 50 cents. TLRY is trading up about $1 here on this news, and then Spencer Israel's favorite play, MJ, which has taken off here in the last 5 days since the Benzinga conference. $30.80 bid here right now. It's trading up 1% on the pre-market on this potential Diageo investment.
Yeah, I mean, these are all getting nice pops. This TLRY is a pretty new issue. It's trading at 39.34. Two highs to keep an eye on here. Your 2-day high was 40.09, and your 3-day high 41.75, and your old-time closing high, that was 3 days ago at 39.94. So hot sector. Haven't taken a look at GWPH lately. That's been on the comeback trail. That's kind of your legacy marijuana. But just keep in mind. When we had Alan on the other day, I mean, he talked about things being in Canada, and I don't know everybody over there in Canada is huffing down or whatever, and that's what they're expecting. But he's looking in the future. He's looking for, medicinal uses, other ways that marijuana could be used in, the cannabis, the hemp or whatever. So, it's just not all about the usage. It's about the medical and,
it's not all about the buzz. It's not all about the buzz.
Yep.
I just got done saying, it doesn't pay to chase. These are stocks that has paid to chase them. And I'm not saying to chase them now, but this thing's a CGC canopy growth has just went straight up and continued to straight up ever since. And this Tilroy, ever since CGC, it was $24 that morning when Constellation announced the investment into canopy growth, and we're now, we got up over $40. The problem is, holy cow, there's risk in here now. This thing is, long ways away from any support whatsoever. Yes, they're trading up here. Yeah, they'll continue to go up probably if Diageo does do an investment into one of these things, but you're chasing these things big time now. So there's going to be some ugly candles in there. And there already has been. 2 days ago, stock was at 40 and went down to 36. So you're talking about like a tidy little 10% drop in one day. So don't think there's no risk in these things. So if you are going into these and you are chasing, and maybe it's the play to do, maybe it's not. But if you are chasing, I would say speculative capital only, because you could lose 20% on one of these things in a heartbeat. So you just got to be cautious. That's the main thing when you're trading these things, is don't throw all your eggs in one basket. Don't throw big money at these things. This I would say is still speculative capital. Still very early for a lot of these companies, and valuations are very expensive. So the sector will probably cool again. Right now it's just hot because it seems like everybody thinks their next pot stock is going to get either an investment from a big gun or taken over.
I had one little foray into the marijuana sector. Dennis, remember that? Leaf Biotechnology.
Where's that? What was
it's back at $1. I bought it.
LBY?
Yeah, I bought it at like $1.20, and I don't know what happened to it. It exploded up to the $3 area, and you were like begging me to get out of it. I think I got out at like $2.80, and it's back down at $1. I guess their story is they're supposed to be like the Google reference guide for marijuana. Like if you travel to a different city, I don't know. It's obviously hadn't caught on. If you buy it right now at $1, the most you can lose is $1.
That's just all. There's so many of these companies out there now, and some of these are not going to survive. I would say the majority of these probably are not going to survive. So it's a matter of finding the ones that are. We've always said, GWPH has other businesses as well. It's pharmaceutical, but it's not a target on any of this stuff. It's these smaller Canadian companies that have been the target. Afria is from my hometown there. They are actually profitable. They're doing well, but I don't really see them as a spirits target because they're on the medical side of it. So why would Diageo, which is a spirits maker, be interested in a medical marijuana company? I'm not sure. Maybe they are. Maybe they can, do something over there too. Marijuana is marijuana, but they're mostly producing medical marijuana there. So you got to think about that as well when you're buying. But every pot stock has been taken off, except the Sleep Buyer has not moved at all, Joel. So when it doesn't go up on, and when every other pot stock is going up, that is not a good sign.
All right, we had some good earnings last night. Technology earnings.
Bad ones too.
Some bad ones too. You want to start with the good ones? How about the Splunkster?
Let's go.
SPLK reporting there yesterday after the bell. Q2 adjusted EPS of 8 cents versus a 5 cent estimate. Sales $388 versus $358 million. Beats on both the Q2 figures. Q3 sales guidance coming in higher than the estimate, raising their fiscal year 19 sales guidance by a hair as well. So all in all, good numbers for Splunk.
Let's see the after hours chart on this, because I'm really curious as to how this performed. Did it get up over 120?
Not quite. 119.71.
That looks like the level up there at 120. And just be cautious. Like, some things can continue, but we've seen sometimes it seems like that you get an initial, the open, and then you get another initial spike where you spook out whoever's trying to short on the open. But it seems like when the dust settles, I wonder in 2 days if this doesn't give some of it back too. You've got so much resistance up there at 120, Joel.
Yeah, you do. And they took it up and took a pause here, just hanging out. This would be one of those scenarios where the longer it takes to get back up and take out that pre-market high, the more I would be looking for a fade on this one. But, of course, you just get up to one night, take out the 120, 121.
Then it opens up. I mean, if you can get to a new all-time high as a start opening up, it could run. But if it struggles and can't take out that high, I'd probably ring the register. It needs to, so watch the early action. This could be one of those that turn too. Don't know if it's going to pull a lazy boy and give it all back in 2 days. Pretty good report. It's kind of a stock that has, a little story to it as well. I mean, it seems like if you've got a story, sometimes that's what matters more than anything. And there'll be buyers on the pullbacks, but I just see all that overhead supply in the 120 area, and it kind of scares me to be buying at 117 this morning.
Sean Udall favorite. I bet you he's long gone in it though. And I can remember when was it a year ago or 2 years ago, Spencer Benzinga was hot on this stock. Was it last summer? Or, I think it was down when it was in the 50, 60 area. I think we were pounding the table on this one. But nice move, as I said, pre-market high 119.71.
Benner showing us Autodesk making new all-time highs here, so it's taking out its resistance with a boom, because we were significantly above. They were trading 151 here right now, which is more than 7 points above its all-time high. So you have no pain in this one. There's no overhead supply in this thing. This is just long gone. So this is one that, I think if you pull back in the lower 140s, you probably find buyers. But to come in here and just say this is going to be the top and it's going to fade, it's easier to fade something that's got some overhead supply than to fade something that has no overhead supply. So that's why I'm probably not fading this move, although I'm not buying it either. So I've making no call.
No trade?
No trade for me here, because you're in an area you've never been. It's too far above the old highs for me to chase it. But when there's no overhead supply, I hate shorting stocks making new all-time highs. Just like I hate buying stocks making new all-time lows, I hate shorting stocks making new all-time highs.
150.75 is where you're trading up nearly 11%, pre-market high 150.98. If you feel like you need to sell this stock, wait to see what that pre-market high is, 151, 152 or whatever, and then look for your immediate follow through. But it seems bid here, and the bulls are just marking this up. Yeah. And
what were the numbers, Spencer? Because it did report.
Oh yeah, I just took them off my screen, but they were okay. I mean, they were good, but they weren't like blow me away good. So the Q2 EPS 19 cents for 16 cents, sales 611 million for 600 million. Q3 EPS guidance light, mostly light. Sales guidance was higher. Fiscal year EPS guidance in line. Sales guidance for the fiscal year in line. So just a bunch of inline guidance, pretty much. Doesn't scream 11% to me, but.
Just about stock that's been loved for a long time. So, I mean, you ever look at it in 2016, we bottomed out at $40. Now we're 140. It's got a story still going. So the trend is still your friend here. And I say I'm a buyer of pullbacks, not chasing it. Not chasing anything. Again, I'm going to keep reiterating. I have not been making money. Not even the pot stocks. Not chasing.
All right. Just real quick for BZ Tokyo from yesterday. FireEye had a nice pop. I guess Nigerian talked about it, and then there was some news out that report that Google hired FireEye to complement its work by internal teams following termination of a link to Islamic. I don't know. Something with Google. You got the pop. You got the pop all the way to 1638. Came back down to 1578. I mean, this thing has really been range bound, and you got kind of down to the bottom of the range, 14.5, 15. I'd have to see it get through yesterday's high at 1638. Did get back some of those gains. If I am long off this news, I wouldn't want to see it go red on the session.
I'll just say we talk a lot about best of breed stocks. We never talk that much about worst of breed stocks. And this FireEye has been the worst of breed, because look at the other ones. I mean, obviously have a little bit different businesses, but, it's cybersecurity here. PANW in the last 2 years has went from 120 to 220. You've got CyberArk, CYBR. Back in the beginning of this year was $40.73. It's almost doubled this year. And then you have FireEye sitting there, the laggard of all laggards. And where it was back in 2017 was $16. Where it is today is $16. So all these other ones, some have doubled or more. And this in the last 2 years has gone absolutely nowhere. And you not only, you have just so many people who are banking on this thing eventually playing the catch-up trade, that it makes it difficult for it to catch up. The trend has been absolutely not your friend. And again, if you're buying it here, you're buying the counter move into the overall underlying nowhere. Well, really, it's been on nowhere. There's just like all kinds of overhead supply, 17, 18, 19. I don't see this thing just taking off. So I think I would fade the move as well.
Yeah, and FireEye. I mean, I think this really had it's old.
What's Sean think? That he likes this one though?
He loves this one.
He's a value guy though.
This is the biggest thorn in his side, I think I would say, out of all these stocks.
He's been hot, but in this one he hasn't been.
He's just holding on. So maybe we could get him back on. Just the earnings from last night for James in the Google chat. Let's do a couple retail earnings stocks here. Let's do ROST stores and Gaps.
Sure.
ROST, Spencer.
I'll start with ROST stores reporting yesterday. The Q2 EPS $1.04 that beat by 3 cents. Sales $3.74 billion versus $3.66 billion, raising their long-term growth guidance. The Q3 EPS guidance was kind of light. The fiscal year EPS guidance was in line. The Q4 EPS guidance was light. But I did mention they're raising the long-term store growth guidance.
Give us Gap too. We'll do them both together. Not that they're the same, but they're both retailers.
Gap
Q2 adjusted EPS of 76 cents. That beat by 4 cents. Sales 4.1 versus 4.0 billion dollars. So beats their fiscal year EPS guidance. Coming in line. Comps for the year flat to up slightly. I don't really know how much slightly is. Comps for the quarter were up 2%. Doesn't do a whole lot for me. But a beat on the Q2 numbers and inline EPS for EPS guidance for the Gap.
Okay, first ROST stores. This has been trading down the entire session. It was a stock that made new highs into the move.
Yes, yeah.
And they're fading that. You got the counter move into the underlying uptrend, so that helps, but it's just so overextended. So it's hard for me to just come. I mean, when July, so go back, and this is not like a complete growth story here. What exactly? So I don't know if I've ever been in a ROST store. It's apparel, right? What else do they sell?
I think they're kind of discount, aren't they?
Yeah, it's
a discount apparel shop.
Discount apparel.
Okay, so there's just so many of these stores. I just don't get it. Anyways, retail's just hot. So could it get bought on a pullback? Yeah, I'm definitely not shorting it in the hole here because it seems like all these stocks just stay hot. I don't know why. I don't totally get it. I think eventually the bubble's I think there's a little bubble in all these retail stocks. I think it's eventually going to burst, but it hasn't burst yet. There's some holes in it from last night though, because it seems like every apparel or retail that reported last night or majority of the retailers are actually trading down. And when we look at, and we're going to go into a couple other ones here too, even from this morning, you got Habet Sports, which is getting basically annihilated, which probably doesn't make the Reverend very happy. But the last couple of days, you saw some weakness here, at least starting in some of these apparel retailers. So Ross is down. You've got the Gap taking it on the chin. GPS, it's coming into support though at 29. So again, it's hard to come in here and short this one too. So I'm very torn here. It's everything in my power. I want to short some of these stocks, but I don't want to short anything that's down like 7-8%.
This ROST stores, the initial number, they took it down all the way to 87.32. So that could be a target on the downside, $3 away. Upon the 4 o'clock open, 88 even's going to be your low. And those are kind of hazy numbers. I'm looking at 91. You had a series of 5 lows right in that area. Right now, you're trading below it, so I don't think I'm too worried about a lot of upside until you take out 91. And on the downside here, you're awful close to that 89.74 low. I'd go with 88.63, baby, as a potential support. That was your August 6th low. Street leaning the wrong way into this one, so a little people caught. They were looking for that extra pop. Gap stores, GPS. Trading down.
Hard 29 level though there.
Yeah. You got a lot there under 29.50. I see 29.70 low. Boom, 29.44 pre-market low. So those marks the low of the moves, but Albrand opened low yesterday and it kept on going lower. Yeah, let's
stop and talk Albrands for a second, because this stock, you want to talk best of breed, worst of breed. We just told you worst of breed in cybersecurity has been FireEye. Worst of breed out of any retailer has got to be Albrands. I mean, these retailers have all popped. Most of them are at highs, or some of them are even at all-time highs. And you've got this Albrands that just cannot get any life at all. It is absolutely hated by the market. Its dividend yield now, I don't know if it's safe, it's 8.53%. It's 8.5%. This thing's, it's just like, like a junk bond yield. So if you think that dividend is safe, I mean, wow, but I mean, it is so hated, and it just keeps going down. And I don't see any reason why it's going to turn around anytime soon. Like, maybe the value traders come in, but they haven't come in yet. If the value guys are going to come in, they would have came in when the dividend yield was 6 or 7. Now it's 8.5. It's absolutely incredible story, considering how good the retail environment's been, considering how good a lot of the other retailers have performed. I guess nobody wears lingerie anymore.
Yeah, I mean, I was just.
They wear yoga pants.
Yeah, they've switched. I mean, now this is I mean, you got to wait for at least a double bottom, triple bottom, or something to lean on. I'll have to think about this one. We did get in the lower 30, maybe 31, 32. This was Lisa's recommendation, right. So I'm not going to take a lot of credit. Did get that pop while we owned it 36.
Well, you wouldn't be taking any
credit, Joel. Take the blame.
Take the blame. Take the blame. Just take the blame. But you know what?
You're blaming your wife for that.
But you know what she has? She has this Exact Sciences came back for us. That was her pick in the mid 40s, and her pick with Lowe's. So I can't. She's
been doing pretty good. So
yeah.
If that dividend is safe, you're getting 8.5%. If what were the earnings? Because I was away yesterday. So give me the earnings. I want to just get refreshed on my own. What was the L Brands report that annihilated it yesterday? What were the numbers?
Well, the earnings for the prior quarter were fine, but they cut.
What were they numbers wise? I'm trying to figure out like multiples.
Fine,
stuff.
36 cents versus 34 cents. Sales 2.9 billion in line with the estimate, but they cut their guidance. That's what really.
What was the guidance like down to? What are they looking to make?
They cut it bad. So the Q3 EPS guidance that they see is flat to 5 cents. 16 cents was the estimate for Q3 EPS. The fiscal year EPS guidance $2.70 to $3. They cut that by that was the estimate, and they cut it by 25 cents. So $2.45 to $2.70.
So okay, so they're still gonna make $273. So it's trading with a multiple of 10. You start to get though, like if you only make $2.70, like what's that dividend they're paying out? Let's do the quick math on that. It's 8.5%. Do you have it in front of you? How much the dividend, the actual dollars of the dividend? I can go look it up.
How much the dollar
I can't do
value is?
Joel's good with the air math here.
I was not even.
I'm just trying to see how safe that dividend is. So it pays. How much is it? Hang on, the air math. It's 8.5% yield, but I don't have the actual dollar amount of the dividend in front.
$2.40.
Trying to grab it. $2. What is it? $2.40. Is that what you're adding up to?
Yeah.
Okay, so they pay $2.40. They're making $2.70, so they look like they're still covering their dividend, even if it's on the lower end. The question is this trend continue that they're, maybe next year they're only gonna make $2 or something? If they think, that they're gonna keep making less money. And that's the case, then the dividend is not safe. So there's not a lot of room for error there. I mean, you're more comfortable in the stock. What did it make like last year? Was it making like $4, $3? What was it making? When this thing traded at $100, Spencer, can you go to the Pro, because you got these numbers in the Pro. It's pretty good for that. When this thing was trading like $100, what was it making? Was it making like $4 a share, or was it making $3? I'm just trying to see, how much coverage you had at one time on the dividend compared to what you do now.
Just looking at 2017, they made 70, 120. They made like 250. I want to say.
They only made $2.
Sorry, 450.
450. And now we're looking at making 270. So that's making a lot less money in an environment that's been pretty damn good for retailers. So that's concerning. So you don't have a lot of coverage here anymore, guys. So that dividend is starting to look a little bit more. Not that it's an imminent cut.
I'm revising
270 is start coverage, but it isn't cushy anymore.
I'm revising my air math to like 3.25.
Lobster said 430.
All right.
So what about 2016?
Somewhere in that.
Well, whatever. We don't want to keep going. Just saying, you can see that if the earnings trend's going down overall, and they've got a high dividend of $2.60 or whatever you said, $2.40. Not a lot of margin for error. So if it comes in anymore and the business gets any more, the dividend will get slashed. So just be careful.
At 8:35, we're going to take our only break of the day and grab Brad at Loncar. He's Loncar Investments. This is his firm. He's a biotech expert. He's going to break down the Chinese biotech space for us. We'll be right back in a moment with Brad. Welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick. Now joined by Brad Loncar, Loncar Investments. Brad, how's it going? I know you're a little under the weather, but besides that, how's it going today?
I'm doing just great. It's always a pleasure to be with you. Thank you for having me.
We appreciate you powering through for us. You're first off, you're from Kansas City. Before we get into the important stuff, you're from Kansas City. How are the Chiefs going to do this year?
I think they're going to be good. Andy Reid's a good coach, and he's got them pointed in the right direction. So I think they're definitely a playoff team.
Can they win a playoff game?
See how deep they get this year.
Can they win a playoff game? That's the question. And all right.
That's what we've been wondering for a very long time. So we'll have to see about that.
All right. You are a biotech investor. You are an index creator, and a new ETF was just launched based on an index you created, the China Biopharma ETF. The symbol is CHNA. Can you kind of give us a top? I guess we'll go top down. So let's start macro. What is the biotech space in China like right now?
Yeah, so it's going through a very important transition. The answer is, until today, they essentially didn't have a biotech sector. And there's 4 or 5 elements that are coming together at this moment that are changing that substantially. And a big one is the government there has a program called Made in China 2025. And the idea behind that is they're trying to upgrade their economy to more value-added sectors. Of course, everyone knows in the past they've been focused on manufacturing and traditional industries like that. And to be globally competitive, they want to focus on innovative sectors. So they've singled out pharmaceuticals is one of those industries that, by that time they want to, really have a first class, globally competitive pharmaceutical sector. So that's one thing. But from a stock market perspective, the most important thing that's changing all of this is until this year, the Hong Kong Stock Exchange had a rule that said, if you don't have revenue, you can't list on our exchange. And if you think about it, most biotech companies don't have revenue. They're development stage. And so for that reason, they never really had like a public market to support a biotech sector. And the stock exchange realized that innovation is what drives the global economy, and they needed to change that rule. So on April 30th, they created something called the biotech exception. And for the first time ever, are allowing true non-revenue biotech companies to list on the exchange there. So already over 10 companies have signed up to do that. 2 have already happened. The first one was called Ascletis. It happened 3 weeks ago. And then Beijing, which already trades on the NASDAQ here, did a secondary listing and raised about $900 million. And
can you give us some
we
symbols?
We think over the coming years, there's going to be dozens and dozens of biotech companies that take advantage of that rule. So that's going to create a whole biotech investing ecosystem. The relevance of that goes way beyond the stock market. And so for the first time ever, these things are coming together to give them a biotech sector. And then I think investors are very familiar with the Chinese tech stocks. Alibaba, of course, had earnings yesterday. And, what happened over the last 10 or 20 years in their tech sector is you had a lot of entrepreneurs who worked in Silicon Valley and took learnings from that and went home and started these world-class companies and that are household names now, Alibaba, Tencent, Baidu, and that's starting to happen in biotech. You have entrepreneurs who've worked in the US biotech sector and are going home and starting world-class, innovative companies. And so I think what happened to their tech sector over the last 10 or 20 years could happen to their biotech sector over the next 10 or 20. And it's just very exciting, and it's been in the news a lot. And so I wanted to create something that focuses on it. And
can you give us some symbols on the stocks you mentioned?
Yeah, so the way I've designed this index right now, it has 28 names. 22 of them are listed in Hong Kong, and 6 of them are listed on the NASDAQ. So one that's investors might be familiar with here is that Beijing. So the symbol is BGNE. And that's been an amazing stock over the last couple of years. It's gone from 30 to as high as 250, and it's come back now. It's in about the 160 area, and they have a big partnership with Celgene. It's really interesting. So this really, I think, it illustrates the potential of how much growth and runway these companies might have. So about exactly a year ago, late July, Beijing signed a partnership with Celgene. Beijing gave Celgene one of their cancer medicines. It's called a PD-1 inhibitor. And at the time, I think Beijing was like 67 a share, and Celgene was like in the 140s. And look at them today. Beijing's gone from, high 60s to 160, and Celgene's gone from like 140 to, as low as the 80s. And, I feel like as a biotech investor, I've always heard stories from people who had invested in our biotech sector in the 90s when it was taking off, and, Celgene and Genentech and Biogen and all of these names that we know today were small entrepreneurial companies. And I kind of feel like that's what's going on now, or maybe going on there. It's like the birth of their biotech sector. So that company really illustrates that. And another one that's a really high-class company doing first-class science is Zylabs. The ticker symbol for that is ZLAB. Terrific CEO running that company, Samantha Du. They actually had some bad news this morning. One of the programs they're working on for atopic dermatitis, they had some bad clinical trial news, so they'll have to discontinue that and focus on some other things.
We're on the line with Brad Loncar of Loncar Investments, covering a tough sector. A two-part question here. The first question, with Chinese companies, the disclosure, getting full information on the companies. I mean, do you think is that something? Is it, is easy to get the same information on, these Chinese companies as you can U.S. companies? And then you mentioned Celgene partnering with that one company. Are there any other of these companies that are partnering with some of the big U.S. biotechs?
Yeah, so as far as transparency and disclosure, the way that I designed my index, I only included companies that are listed in Hong Kong and on NASDAQ. I did not include Chinese companies that are only listed in mainland China, like on the Shanghai Stock Exchange, for that very reason. Hong Kong and NASDAQ are global exchanges, and the companies that list there are signing up, I think, for a higher degree of scrutiny. And also, we're trying to focus on companies that don't just want to be leaders domestically in China, but want to be global leaders and globally competitive. And we think those types of companies will choose those two exchanges. So we have that, what I view as kind of a quality filter built into it. Another ticker you can throw up is HCM. So that company is Hutchinson China Meditech. That trades on the NASDAQ as well. And the nickname for that company is ChiMed. And it has a lot of partnerships. Its main partnership is with Eli Lilly. They've developed a drug called fruquintinib that is currently under review in China right now for colorectal cancer. And it's potentially historic because as far as we know, it seems to be the first innovative new cancer medicine that was entirely discovered and developed there. And that company is interesting because it's backed by a big Chinese conglomerate called Hutchinson Whampoa, which is, listeners might be familiar with that one. It's run by a billionaire named Li Ka-shing, who kind of the Warren Buffett of Hong Kong and Asia. And so that company has a great pedigree. It's been around for a couple decades, and they've got a lot of great partnerships, like with Eli Lilly and AstraZeneca and companies like that.
Question here from our chat, Brad. Going to throw a couple at you. What do you have any opinion on China biologic products and ICANN Healthcare?
Yeah, that's a good company to be asking about this morning. So I'm very angry with them today. So they're in the news. They had a buyout offer on the table for $118 per share from their previous CEO and chairman and the consortium of other investors. And they're in the news today, and the stock will be down pretty significantly because they announced that not only are they declining this $118 offer, but they're raising like $500 million at $100 a share and diluting the company by 15%. So that obviously in the short term a huge disappointment because you had the short-term possibility of a $118 payoff, and now they're not only declining it, but they're diluting and all of this. So, I don't give any investment advice or stock picks or anything like that. But what I would say is this board and this management team now has a lot to prove to really show that declining that $118 offer and raising this money was the right thing to do. So it's very disappointing for those people that wanted that buyout today. And for that reason, there's weakness in the pre-market in the stock.
One more. Any thoughts on ICANN Healthcare, KNG?
Yeah, that one I don't track. It's not included in my index, and I don't really have any thoughts or opinions on it.
Okay. Brad Loncar has been on with us. He is a biotech expert. Brad, I was reading some stuff you wrote a few months ago ahead of ASCO. I was reading your predictions. You hit the nail on the head in terms of who was expected to shine there. Loxo, you called them out. So great analysis on that. Want to give you props there. But Brad Loncar is Loncar Investments is his firm. He has 2 ETFs. You can find them on loncarfunds.com that are based on his indexes. CNCR and CHNA are the 2, cancer immunotherapy and China biopharma. Brad, thanks so much for the time today, and feel better heading into the weekend. It's Friday, so you'll feel better naturally.
I'll do that, and we'll have to call back in and see how the Chiefs are doing later this year. We'll see how that goes.
I'll call you before the playoffs, so you're feeling a peak optimism.
Sounds good.
All right,
Thank you.
All right, have a good one. Joel, what is doing this morning in the markets? S&P at least.
We are just hanging up near the highs of the pre-market session, 65.50. Really have nothing to lean on in that area. Wednesday's high was 68 even, Thursday's high 69, and then the recent high of the move at 29.74. So there is resistance here. I was kind of hoping that we were going to stay below that triple close of 28.61. So got a small short position in the spiders. If we do close above 28.61, I will be closing out that position today. Just, trying to pick a top as usual. Dennis, what do you get? We skipped imbalances. I mean, what do you got? Some small.
The same ones all the time. Alibaba back. Okay, so the only one of note here, Alibaba's bouncing back here a little bit this morning. It's up $3, up on 180,000 shares. Just caution here. Everybody got burned yesterday. So you're seeing a little relief rally here. I think that gets met with more sellers. So I'm not chasing the Alibaba rally here this morning. GE, eternal sell and bounce, even though it had a little rally a couple days ago there. It's got 120,000 to sell. We've got, what's interesting is you actually, and I own both these stocks, Merck and Pfizer, and Big Pharma has just been hot as hell. But it's starting to stall a little bit here. So, Merck. Yeah, well, look at the Merck chart. What do you think of this one? Because I don't know if there's news on Merck. It's trading down the pre-market just slightly. But, you got a double top in there just above 70. So you get through this nice psychological 70 level, and then you reverse off it. Now you're starting to show some weakness here. These all tend to move together. So Pfizer just kind of hanging here. But there's been that, remember we were talking about that sell and balance guy. He's been there every morning. Some institutes have been unloading for the last 2 weeks. And maybe it's just, that they're up a lot in it because Pfizer's really come back. But sometimes that big money ends up being right. We've seen that before. So in some cases, in the longer term, there's some smart institutional traders out there. So I don't know. I'm starting to think, I'm holding on to these in my long-term investment portfolio, but just thinking as trades, Pfizer, Merck, they're starting to look a little bit exhausted from this significant rally.
Yeah, I mean, a double top at a whole level like that, you got to, keep an eye on that. 70 and a quarter, 70, 22, still not near all-time high. And you're right about the Pfizer. It's just these profit takers coming in, and you don't think it's a big deal, but you hear, 70 million one day or 50 million, whatever. This is, they want to sell over 42. That's their target. They don't want to put a huge order out there, trying to extract maybe a little bit more alpha by letting it trade above 42 and not just hitting it with a 5 or 10 million share order. So I see that in Pfizer. 3 days of consolidation. $42 still looks like a pretty good support level. Those are your last 4 lows. So 42, I be protective of that. JJ asking about BMY, Bristol Myers. Got a triple bottom here, $60. The stock absolutely needs to hold $60. Yeah. That's your last 3 lows, and really 4 out of your last 5. So just sitting there at 60.09. If there's
it's come a long ways back too.
Yep.
We're $50 earlier in the spring, and we're this is big moves. You could say, oh, it's a 10-point move if you're used to trading these high flyers, but in big pharma like this, when they move up 20% a couple months, those are huge moves for these stocks. These are widely owned stocks. Blue chips that typically don't move like this. I mean, this Pfizer move, when you look at it from 36 to 42 in the last month, this is, if you go back in the charts, it hasn't had a move like this in years. So this has been a really impressive move. And it's not surprising that there might be some institutions that are starting to look at taking some profits on it. Bristol Myers has been in the doghouse forever. And it seems like every time it gets back into the 60s, we look at it a few months later and it's back down the low 50s. So I'm not chasing Bristol Myers up here. I'd probably be looking, even if I was in it and bought at 50, I'd maybe be looking to take some profits. But in the long term, I think, these can still be core holdings in your investment portfolio, aging population, that whole argument. Just talking short term, if you're in these for trades, I feel like it's kind of starting to get a little bit tired.
And you could also, I know you're not a huge fan of selling calls, Dennis. I don't know if there's, premium.
You could do that. That's another way. There could be something.
Or, if you're that way, I mean, buy a put or, something like that. I mean, of course, selling the calls, you get to bring in the premium, but you kind of limit your upside a little bit. Yeah, these stocks they definitely have had a nice run. And what was your target? Take your target. Like if your target was $100 in Walmart after that bump and you didn't take $100, then man, you're sitting here at 95 and change. So, just
I don't think you get back to 100 either. Like even on the Target earnings yesterday, Walmart couldn't lift. Yeah. And then Target started to give it back. So watch Target. Be careful on Target here because Target was way up on their earnings report, and it's kind of leaked here too. So some of this retail, the big retail, is starting to look a little bit tired too. I mean, there's been some impressive moves here. And sometimes the best thing to do is, if you're thinking, your stock's getting tired, you're sitting up, sometimes booking the profits is the best thing to do. Initiating the shorts is always hard when stocks are still strong. So it's a harder trade. And obviously a lot of, traders don't. But I mean, you look at this and I just think they've had some pretty extended moves and they're starting to look tired. And sometimes that is the time when you can initiate a short if you're not in it.
Did you see Williams-Sonoma yesterday, Dennis?
Crazy moves. I mean, and that kept going. So it's not like you can just come in here and just fade anything. So, some things it's funny. You've got to be careful. You've got to have, you might have, say, okay, well, I think this is going to reverse. Sometimes they continue for a couple of days. So you got to almost wait till you have that first red candle. Give yourself a reason for coming in. Just don't try to call the top. And, we've been talking about, some of the earnings this morning coming in and fading these things, but wait till you get a little bit of selling coming in and then you get a little buying back into like a check back up into those areas. That's where you strike. Not when the things are just going straight up because it could get run over. And something like this Williams-Sonoma, I mean, it just opened up at 68. It ran to 69, to 70, to 71. Yes, there was 50-cent pullbacks in there, but holy cow, I mean, nothing of significance. And it's straight up 5 points from the open yesterday.
Keep an eye on the close. The high was 73.22. The close was 72.94. So as long as this stays green on the session, I mean, and you got to give this a little bit more than a nickel or dime. It's a high flying stock. So, but you want to see it continue above 73 and make sure that, it's not a big seller there. Maybe wait for a double top or a little consolidation, but looking good on the chart. Basis the monthlies here. If you're really holding out on this one, 75.90 was your high in November of 2015. So that's another roughly 3 points away. But let's see if it can open green and stay green.
Can we talk Foot Locker?
Go ahead, Dennis.
Well, can we talk Foot Locker? We didn't do that one yet. And that
sure,
was,
go ahead.
Yeah, that was kind of the one of the big ones in the morning. So they reported 6:45 a.m. Q2 EPS 75 cents is a 5-cent beat. Sales 1.78 versus 1.76 billion dollars. Beat on the top and the bottom line there. Q2 comps were up 0.5%. Stock kind of just bouncing around here this morning.
Yeah. It's traded a lot of volume, 415,000 shares, but can't really decide. I wanted to go up a little bit. Now it wants to go down a little bit. So a real battle between the bulls and the bears here. When the real money comes in, we'll have to see what happens, because probably not going to stay at 53. Either the bulls are going to win or the bears are going to win here. But it was moving up into the reports. Reports okay. I'm going to sit here and probably go with the winner. I mean, if this thing opens at 53 and starts to sell off and takes out, there's a lot of buyers that looks like in the 52.50 area for whatever reason. I don't know why. I see ARCA even in the pre-market, 21,000 shares there. Not that that's a lot, but that's 5% of the pre-market volume already. It's significant. When we could start taking it like 52, then it could roll over. If it goes the other way and they decide to start buying it, I would say all those highs around 53.5, 53.60 that you had back in July. Get above there and maybe got room up over 55, but this one's gonna be a tough one to trade.
Yeah, I see the resistance there. You hit 53.50 yesterday, multiple highs up at the 53.5 area, just below, back in the middle of July. Also got to get green first. I mean, down 30 cents on the session. See if you can get green and stay green. A lot of resistance here. Coming back on the downside, don't see much at 52.50. Your 2-day low is 51.80. So still trying to decide what to do here in Foot Locker.
Let's go to your disaster stock of the day, Spencer. That's the Bet Sports. Is the Reverend still in this one, or did he sell out? He was in this early, and he made a lot of money, and he was buying this at $10, $11. And he made a lot. I don't know if he sold it. I hope he sold.
I'm afraid to ask.
Well, he remember he was buying. He was on our show, and he was like literally when the stock was like $10 or $11, and he was pounding the table.
That was like
he was just buying. Every day he was buying more stock of this. It worked out for him, man. This was going back. If we go back and look at the weeklies, we're talking about July of 2017. He was buying this thing near the bottom, I believe. If my memory serves me correctly. Yeah. I don't know if he's still in it or not, but if he is, he's down 20% this morning because this thing's getting hit.
Well, they cut their EPS guidance for the fiscal year. $1.65 to $1.57 on the low end of the range. Comps for the year, this is comp guidance, down 1% to up 2%. As far as Q2, they had a 6-cent loss on the EPS versus a 7-cent gain estimate, and their sales guidance missed by $4 million. So the EPS was a big miss, and cutting guidance is never a good thing.
No, this looks like a mess to me too. Yeah, you have some support down here in the lower 22s, but that is a very, just think about it, and you say, you're going down to $1.57. Stock was at 29. You're all of a sudden trading with 20 multiple. Some of these, is a big boxy stores, or they got, the sporting goods. I think it just got overextended at 29. Maybe you got some support at 22, but when they're cutting guidance and they're doing that kind of stuff, it's not the kind of stock I want to buy on the pullback. So be cautious on this one.
Boy, oh boy. It's just hanging out near the lows of the pre-market, which is not a good sign. The initial pre-market low was 23.50, 23.15, trading 23.50. So if on that first whoosh down there in the lower 23 handle, you catch a bid. I see a low at 23.05, then you get a little bit chance of a rebound. But just think, imagine it's like people like the father that have been in this thing, when it's 9, 10, single digits, 11, $12, still selling at 23. They got a lot of profit. I'm looking at holding 23 or else continued downside.
All right, that's going to be it for us for today and for the week, I guess. So hope you guys enjoyed the show. Just want to remind you, as I'm answering someone's question in our chat, all the information on our show is for informational purposes only. If you're looking for stock picks, go somewhere else, I would say. But that's going to be it for us. Thank you to our guest, Brad Loncar. Thanks to all of you who joined us in our chat rooms on YouTube and premarket.benzinga.com. Hope you all had a good morning and you have a good rest of your day. Have a good weekend, please. And I hope you join us again on Monday.